Alright, welcome back everybody to another wonderful educational video from yours truly, a ICT student, the balance trader. That's what I want to call myself. So, if you notice my mouse lagging in advance and it being really slow, my computer's just being slow and picky. So, just want to let you know that it's been doing that a lot. So let's get into this. So what you're looking at right now is the NQ March delivery contract for 2024. We just entered 2024, so Happy New Year to everyone, and let's hope we can learn something together and win this game and actually make money and understand this stuff a little bit better. So we're looking at a daily chart here. And as you can see, the market since basically October, we've had that shift in market structure after trading into equilibrium on the monthly chart of a monthly fair value gap. Sent it higher, had a retracement here, expanded higher, took out July, October, or not, it took October and September and July high. I said that a little bit backwards. So we've cleared all of the previous 3 months highs, which is a good thing, but it also means that we're definitely due for a retracement, in my opinion. So we're retracing right here because we've had shown a willingness to reject off that weekly fair value gap. So it's not here on the chart. I can actually pull up a NQ chart. I'm going to do a chart where it doesn't have my annotations on it. So I do NQ 200. The second, I don't know what that means. The 2 exclamation point. I have no idea what it means. I don't really care. All I know is I want a nice clean chart because I'm going to get into these annotations and you're probably going to not be able to read it very well. So weekly fair value gap, this may not be the same price levels, but regardless, the weekly fair value gap is still there. So actually, as you can see on this contract, we've actually filled it in. So we haven't filled it in on the NQ1 explanation point. Again, whatever that means, but we haven't filled that on or filled that in on the continuous contract. So this one is showing that's filled in, and obviously it's rejecting off of that. So you'll kind of have to be mindful of that when you look at the other one. Whereas the other one, it didn't quite fill it in all the way. But we also have a, I don't know if we have a fair value gap, a bullish one. My mouse is lagging. Come on, stop doing that. We have a bullish fair value gap right here. I don't think we have it on the other one, but it doesn't really matter. What I'm paying attention to is this fair value gap right here. So I will have that annotated on the other chart. It's going to be a lot of stuff that's overlapping, so it's going to be hard to see. But I'm going to take you deep down into the 4 hour, 1 hour, and basically just talk about price action on the longer time frames. That way you can actually see what I'm talking about, because this is not the whole point of what I'm getting at. This is basically me explaining what I believe is a market maker sell model. So go to NQ on this chart, and as you can see here, a lot of scribble. So some of these callouts are from my own journal entries, but as you can see here, haven't quite hit that fair value gap high on this chart. We're rejecting, and I believe, I don't know 100% for sure, but we may it looks like it's overshooting it a little bit, but we are possibly, yeah. So we overshot the lower quadrant, so that 25. I know it says 0.75, but we're overshooting that 25% level on the weekly candlesticks. But that would have been nice to see it respect that. But that doesn't really matter to me. It just is a signature, and it's just interesting to see. I'm more worried about consequent encroachment. So specifically here we have hit the premium of the weekly fair value gap, which happened last week. So we'll go on a daily chart here, and you can see all the way back here where it started here, all these candles passing through. Daily chart has now officially priced in to the premium of that weekly fair value gap. Now that's where you're going to want to look and see if you get a reaction right there. So obviously last week, Wednesday, we went into it. You're going to expect previous day's high to be taken in order to, that's the only way we can create a swing high, is if we take previous day's high. Or we could just not do it, and this could be the high. But it's only Wednesday, and you have Thursday and Friday, so the high of the week may not form until Thursday, because we have a holiday shortened week. So you kind of want to expect that Thursday might be the high of the week. Not always, but you want to look for that. And if it was like non-farm payroll, then maybe Friday would have been the high of the week. But obviously that's not the case. So what I'm looking for, and what I have been looking for, is I wanted to see this down close candle get violated and create that market structure shift to go lower. Now, got that. It did actually end up happening overnight during London, which was very, very violent, but we still got it. So I'm looking to see if we're going to trade into equilibrium next, but that's besides the point right now, because I want to get into this 4-hour chart. So all of this in here, just ignore all this. This is all my annotations. What you want to be looking at specifically is the right side of the chart. So just pretend that's not there, okay? I apologize if it's messy, but it's just it's a good experience for you to understand and see how to journal and like how you annotate things, because if you're lazy, you can tell right away that you're not doing the work and drawing these things out. So what I want to mention, and I thought I had the levels on here. Just sworn I had them. Okay, give me a second. So in here, you're not going to be able to see it, but what I'm drawing here, and I know that I had it. So this is a fair value gap on the daily chart. I was looking for that to act as an inversion level, and this is where you really want to dive deep. So these blue lines, this is your daily inversion fair value gap. So the D stands for daily. Now, look closely right here at these bodies. Look at the bodies. Look at how they're respecting the low end of that. Yes, you're getting your mohawks, but this ultimately, all this is doing is returning into this 4-hour, or this hourly actually, this hourly fair value gap. It's also trading into a premium. So basically from this high, zoom out here. So this is really, really good stuff right here. I love this price action. So this swing low to this swing high. We took up buy side here. Ran that, and we took out a sell side liquidity pool right here. That was taken. And we also dug further and no, we didn't dive quite deep, but regardless, we took out a sell side liquidity pool. The sell side has been taken here. That this candle specifically, if you look, I have these lines, that's why I keep them here. Look at that. That is the low of the weekly fair value gap. Look at the reaction off of that. Bounces right off of it, and that's what was utilized to send it back into a premium. So, buy side swept, displacement lower, returns into a premium above equilibrium, which is right here. See how it's consolidating right here, but ultimately it does break lower. Now, another thing that you want to look for is you don't want to see this support price. You want to see this get violated. You want to see price go right through it, like it did right here. That's what you want to see. I'm going to take those right here. I'm going to remove this Fibonacci after I'm done, but I want you to notice something right here. The fair value gap, specifically the midpoint, the high, and the low, above the midpoint is premium. Notice how it went up there into a premium? Well, it's trading above equilibrium of this price leg right here. That's where you want to look to see if it rejects. And obviously you can see the closing price of these candles sends it lower. Now, to remove that, I wanted to mention that was important to me. It's really good. It's a really good thing to understand these signatures to see, does price reject it or does it find support at it? When it gets to a premium here inside this daily inversion fair value gap, when it gets to a premium, that's where you really want to see it get rejected. Preferably, you want to see it get rejected right at consequent encroachment. Even better, not even get to consequent encroachment. That would be even better. But it's perfectly reasonable for it to get up above that a little bit and poke through it. So, this obviously was not something that I was participating in, and I would never have been able to because I'm not awake at 4 o'clock in the morning, or 3 o'clock in the morning, or 2 o'clock, or 5 o'clock. So London Open Kill Zone, not awake during that time. But this specific level is important because I created a fair value gap. You want to see that fail. Now, all this back and forth movement, from my learning experience, is all time distortion. It's just spending time there until time is of the essence. So 2 o'clock to 5 o'clock, time rolls around, sells off. It didn't need to sell off like that. It could have waited till New York. Sometimes this does happen where it opens up during London and you get to sell off and it goes to where you were expecting it to go before the opening bell. And then that gets everybody on board and tries to they all get in there and try to sell shorts. Oh, God, it just makes me laugh. But that's just my younger self talking. So we're going to go to a 5-minute chart for this. And zoom over here. So on the 5-minute chart. I would not have taken this. You could have taken this because you do have a breaker here, so we have a high, low, higher high. These last few down close candles. What's it overlapping here? Consequent encroachment of this bullish fair value for this bullish fair value gap. It's overlapping it here. So you would take these candles. I personally would not have been comfortable shorting this because I would not expect this movement here, but I mean it is what it is. But anyways, so we trade up into there. It respects it, and this is also a fair value gap right here. Breaks lower, takes out a short-term low, shift in market structure, creates a fair value gap, leaves the bullish fair value gap. Now it's balanced price range. It shouldn't go back inside there. I mean, look at how many times it's went back and forth inside of it. It should be a balanced price range. It should not find support here, especially if you're expecting lower prices. So eventually it does leave it, comes back up into it right here, takes the buy stops out. Ironically, those are just underneath the fair value gap. Kind of funny how they put those right there. And yeah, she just took off after that. All the way up to about the opening. And melted into the opening bell. Ironically, at the morning, it didn't chop around. But that's because you have this weekly fair value gap. Where is it? Wait, sorry, I take that back. That's not. I didn't say that. So, I wanted to mention something over here. These lows. There it is. That out of here. So these lows, obviously I've had my mind on these for a while. I'm going to go to the hourly chart quick. So we got a nice smooth edge right here. That would just stay still. So we have relatively equal lows. And then we also have a little tiny little fair value gap in here. That's kind of hard to see. If you were at the opening bell, I personally wouldn't have not have been a participant in this because it had already moved so much that I would not have liked it. So, is this even trading in? Yeah, see, it's not even. Like, this is just too much movement lower with no retracements, no opportunity to get in. It just left and tore off. So I personally would not have been able to participate in that. I would have skipped the morning session because this is where ICT talks about where it likes to chop around. Well, it delivers where you thought it was going to go all in one single pass, and then the morning opens up and it just chops. I mean, look at this. All this chop. Yeah, you get some movement, and ultimately it does trade into your low of your weekly fair value gap, which is probably that line I just removed. I gotta put that back. So, right here. Essentially, those sell stops that I just wrote down is basically the weekly fair value gap low. So, weekly. Or actually, it's the high. Oops. I'm not with it today. So that's the high. So you're looking for the market to trade into that weekly fair value gap level, because that's an inefficiency. So you need that's what you're looking for. So it does do that, but it does not offer an opportunity to get in. So afternoon session is a little bit different. Actually, I'm going to take S&P here, side by side, and you're going to notice something special about S&P. So here's that consolidation that ICT always talks about when the London opens, and well, not so much London, but the move is just delivered before the opening bell. So you have an hourly fair value gap over here. I don't have it drawn out, but this area over here is your fair value gap. Draw that through, and you're going to notice that prior to market open, it already delivered there. So it's already in a discount. It's already reached its discount raise. So there's no need for it to accelerate lower, unless it's like really, really bearish. But I don't see that happening. So this is a 15-minute chart of NASDAQ. So I'm going to take this down to a 5-minute chart. And a 5-minute chart on the ES. So if you look and compare the highs with my cursor here with the dashed line, this is the morning session high. Yes, there's a pool of liquidity sitting over to the left. Over here, you're expecting it to go above that because you have this inefficiency right here. It'll probably want to trade up in there on a higher time frame. And you also have this old low too. So you'll have to be mindful of that when it's trading up. Not just assume that it's going to go above this high and it's going to be like a turtle. So no, it's going to reach above it specifically if it's really weak on the hourly chart. You're not going to expect it to trade to consequent encroachment like all these up here. You're gonna expect that to just stay open. If it's strong, it's gonna go up there and redeliver to that. But NASDAQ is obviously showing that it has no energy to, in fact, get up there. Like it just keeps falling off a cliff. While ES, its same moves. Like if you look at this drop in NASDAQ on the right screen, and then you look at ES, look at how ES it falls off, but it's not as heavy as NASDAQ. So that tells me that NASDAQ is really weak, and they're both weak in general, but NASDAQ is really bearish. So getting up here, when you have NASDAQ not trying to create that deeper retracement, you can expect that this upper portion of that hourly fair value gap is probably not going to be traded to. It's probably going to have a hard time getting through this. And as soon as you see it get to the high end of this, filled in, and then it just like leaves it like that, that's where you can tell that it's probably weak. And it's further confirmed by SMT here. So we have this high right here that I went off topic a little bit here, but this high right here, 9:30, the opening high, the AM opening session high, that high was taken in the lunch hour. But if you look at NASDAQ, this high right here, ES took that high. NASDAQ is failing to make that higher high. It literally can't even get all the way up in here. Like, it's so heavy that it's basically like this is an institutional overflow entry deal. Now I'm going to be mindful of that level going into tomorrow, because it might want to go on there, but this to me is my range for going into tomorrow. This is my range, but this short, I actually was able to take a short here on S&P to go below this low. I'm going to show you that quick. Kind of give myself a high five because I actually took a trade. Distribution labels. So, right here. So here, I was a little bit late on it, but this is a breaker. So we have a high, low, higher high. Here's the high, here's the low, higher high. Down close candle in here. I know it's not really much of a down close candle, but it's still there. I noticed that SMT right here. It broke lower, sold short, attacked the sell side. And that was my short. Get that out of here. You also notice that that short, your target, when it got filled, how low can it go? Well, you can use NQ as a indication of how low S&P can go. So if you had like another contract going in here, you could use NQ. So like NQ is so heavy, and it's really close to that daily fair value gap that I have drawn right here on this blue line here. So it's called the daily fair value gap. Go back in your chart and look at it. I'm not going to show you here, but if you look at that and the day's coming to a close, you can expect it to go down on there. Just to the high though, because I mean it's been so heavy that there is really no reason for it to get to the low end of it, in my opinion, because it's already delivered enough, in my opinion. I mean, this is really animated to the downside. So that's why you're seeing this bounce here. Going into tomorrow, this high. Oh, and by the way, this is all a market maker sell model, looks like to me. So this consolidation leaves it short, another short, and then obviously targeting. Obviously, I don't think it's done yet. I think it's got more room to go lower. But this is lunch liquidity. So New York. Launch buy side. So I'm gonna be mindful of that one. Let's hourly chart on NQ. So I'm gonna watch, because this is so bearish. And we went through that fair value gap already. So I'm gonna have this fair value gap on my chart. this old one on the hourly chart on NQ. And this one as well, because it's within the same vicinity of this fair value gap here, so this SIBI. So we have a overlapping of a higher time frame, 1 hour bullish fair value gap right here, and then we also have one right here, and then we also have a up close candle. So we have a couple of premium arrays that I'm going to be looking at, and if NASDAQ can be really heavy, maybe it'll go up to this one and not get to this one. We also have this up close candle. So we'll slide this over. That opening price here. That's your 1 hour order block. And then down to a 15-minute time frame. So really nice, clean order block here. Lots of consecutive up close candle. I'm gonna watch that. We have smooth highs here. I am gonna be paying attention to see if we can get above that and see if we reject up at these levels. Obviously, what changes that and what makes me think that we may run up into here, well, we have to gain support here. If we gain support here, then I'm going to be looking to see if we run up above here. But I would like to see this stay open because we have had displacement below this fair value gap on the weekly chart, the low end of it. And I really would like to see us get into the lower part of this inefficiency, this consequent encroachment. And then that ultimately will decide my bias long term if we're going to find support and make another leg higher on the futures, or if we're going to long term go back into maybe a short term decline into a deeper retracement, or are we going to find support at this weekly fair value gap? Now, the reason I think that we could find support at this fair value gap on the weekly chart on the NASDAQ, I'm not going to pull it up, just look it up on your chart, is because I got the dollar, which I'm going to pull that over here. I personally like the idea of the dollar getting up into here. So, I swear to God, I had all these levels on my chart. They get removed. So, bearish order block. I want to see it get up in this inefficiency and reject for that continuation on NASDAQ and S&P and overall all three of the indexes. The reason why I think that dollar could get up here is because we have these clean highs right here, which is used to send us lower. So we're getting through this inversion fair value gap right here, this SIBI right here, we've gotten through there. I don't know why this is showing up as a long tail like that. That's not how it closed. It closed up on its high. So I don't know why it's doing that, but it is what it is. So I also want to see this support price, and that should send us higher into this volume imbalance. And I don't know if we're going to close this in. If we do not close this in, then that supports that the indexes are going to trade higher. But if they don't, then probably going to get up into here and fill this in. I prefer that it didn't do that because look at the monthly. We got a balanced price range right here, so we have a busy. It's got our offer sell side. It goes right through it, and ultimately it just tanks right through it. So I think it's going to stay open and remain heavy. And you can also see that it's causing an immediate rebalance here. So it's rebalancing it, not making any opportunity for a fair value gap to form. But overall, if the levels get traded to and we get above these highs, reject this fair value gap, and dollar starts to trade out, tongue twister. If dollar starts to trade lower off of that, then I expect that the indexes will in fact trade higher. So that's what I'm sticking with for the next couple of weeks. Obviously right now I'm focusing on the markets going lower and getting up into these, or not getting up into these, getting down into these lower levels and dollar going higher. So that's all I got for you. Hope you found that insightful and helpful. But that's all I got. So.